Well. Here we go. Another day, another down. Way to lose money in the stock market. It is disappointing. It is depressing. But this is like the perfect time to shamelessly shill real estate. Not that I'm selling you real estate or anything, but I do want people to just for a moment think about real estate and a benefit for a moment for real estate. One thing that real estate, especially low debt real estate, does for you in this environment we're in, lower debt the better, okay? Because debt's obviously, mortgage rates are up right now. They've been up since this war started, it's been like straight up. Totally the opposite of what Donald Trump wanted. But one thing that real estate does is it diversifies you away from the short-term insanity, geopolitical hits, oil. You get the short-term, you get insulated away from that. And in the event this lasts long enough to where we trigger some form of a recession, you end up having a piggy bank that you could pull money out of. It's money that you've allocated to real estate, which makes it hard for it to evaporate in the stock market, but it makes it easy to leverage against in a recession when rates go to zero, because that's what they will do. Rates will go to zero. That'll be one of the first things the Fed does. In the event we end up striking some form of recession, depending on how obviously long this conflict lasts. So there is a desirability of diversifying real estate, even though real estate has kind of like, it's in some areas is actually up since 2022, which is great, especially those lower built areas. But something that you have to think about with real estate is nobody's really cared about real estate the last 4 years because rates have been high. I think it's been this perfect opportunity to accumulate. And I think that will continue until rates come down. Now, my base case is that rates will be lower than they've ever been before by 2032. I don't know if that's going to be because of a recession or just because of the deflation of artificial intelligence that ends up arriving, along with, getting through transitory. That will probably take a lot longer than the 5-year game we've played so far. It will probably take in the order of a decade, which is why I made the estimate in 2032. I've been saying it for the last 4 years. Those of you who have been here for the last 4 years, I've been saying this. But the last 4 years, my call has been rates will be lower by 2032. Could be before that, but the call is buy, which in my opinion creates this sort of 10-year window to buy real estate between 2022 and 2032. Because then you can go refinance at, super low rates, lower than obviously your cap rates, what you're earning on rent. So HouseHack is knocking on the door of about 100 in assets. And if you end up taking that and refinancing it, let's say you had to refinance it tomorrow, and that represented 35%. You could basically leverage a portfolio up to almost $300 million, which is crazy. So creates a lot of buying power is the point. Real estate's easy to leverage against, and harder to. It takes more time. It's certainly easier to leverage against than stocks, harder to leverage against stocks, but. In my opinion, it contains less risk. So I'm now getting a read here that there's now some pricing of a rate hike by October. Let's go take a look at that. The Treasury market is really selling off, leading bonds to really rocket today on a yield basis, which is very, very bearish for the stock market. The bear flattener is continuing. I've got 9.3 basis points on the 2-year. The 2-year is almost at 4%. And if you look at the 10-year Treasury, we're up about 69 basis points here, or 6.9 basis points. We're up at 4.35, which is really high. Here, let me show you, something, attractive in the meantime, just to try to relax the pain of what you just saw. You just saw the 10-year at 4.35. That's painful to the eyes. You need something better. All right, good. So it's not a surprise that as yields on bonds have risen over the last 33 minutes that the market has been open, then the market's been selling off. In fact, that's as usual, but I mean, we're not always right, but that's exactly what we flagged in the Alpha report this morning. That the canary in the coal mine today is not oil, it's actually the treasury market. And sure enough, that's exactly what happened. The canary in the coal mine said, no, don't trust the bounce, because the Q's had a little bounce right here, right? But look, there was no bounce in the bond market at all. And then the bond market fell off a cliff, which suggested this was not a durable bounce. And so you really need yields to come down. Unfortunately, as yields continue to rise, you are seeing Tesla come under pressure. Tesla is considered a rate-sensitive stock. That is because people finance vehicles with Tesla. Now, Tesla also buys down loans, but the more yields go up, the more they have to pay to buy down loans to, levels that are attractive. If we go to, let's see what we got here. Model 3, Model Y, Cybertruck. And they're phasing out, obviously, the 3 or the S and the X, which is disappointing. But here they're pitching lease. What if I go to buy? Let's just take a peek. So if I go to finance, they're doing 6.29 on a Model 3. That's not attractive. Okay, what about over here? Let's just load all the order now pages. On the ones they're deprecating, they're only buying you down to 3.99 on the S and X. It's because rates are going up. It's getting expensive, right? On the Cybertruck, they are also getting you down to 3.99. And on the Model Y, they're pulling you to actually 0%. Wow. Probably more inventory buildup over here on the Y, or they're just trying to, encourage Model 3 buyers to get the Model Y instead, because there's more profit in the Model Y than there is in the Model 3. That sounds reasonable to me. But again, as yields go up, it's going to get more expensive for Tesla as well, which is unfortunate. It gets more expensive for everyone, whether it's private credit or what it could be. So, okay, great. So let's go take a peek. How much of Tesla's valuation is based on the car? Yeah, well, that's the problem. It's maybe $150 of the company's valuation is actually the car business, probably honestly even less. So what you're really talking about is enthusiasm around Robotaxi and Optimus. But the problem is, anytime a company trades off of, a large portion of the business trades off of enthusiasm for a future product, that future product invariably takes longer to create or to provide updates on or to make progress on, because that's just the nature of building. Things take longer than you anticipate. And so as, new future updates are further and fewer between, you end up with, more bearishness in the asset. So it's unfortunate, but we'll see. Hopefully we could settle out here. I'm still not seeing the treasury market bounce, but I am seeing about a 5-minute green candle set here on the Qs, which is good. But let's see how durable it is, given that, again, we're not seeing any kind of move on the treasury market to indicate that yields are relaxing. Instead, there's now talk that markets are slowly starting to price in an interest rate hike, which is exactly what I warned about on Tuesday, and people made fun of me for that. They're like, oh, this is ridiculous, Kevin. This is ridiculous, Kevin. And then sure enough, they hinted at a hike. Really, and we were talking with course members about this earlier, but this signals that markets are pricing in at least a 25 basis point hike, maybe even a 50. Let's go. Oh, here we go. Here is the Reuters headline. Wow, that came in like substantially later than I've seen in other sources here. But U.S. to deploy thousands of additional troops to the Middle East. 3 U.S. officials tell Reuters. But that has been now known for about 20 minutes. but I'm just now seeing it come across the wire services. All right, so if I go out to October of 2026, you can actually see that we are now pricing in a 33% chance of higher interest rates, not lower. Markets are now pricing in an interest rate hike, about a 30% chance, so it's not massive, but a 30% chance of a hike by October. If we go to December, you can see that falls to about 31%. That's not great. You know, rate cut bets have evaporated so quickly that you've actually now seen rate hikes begin to get priced into markets. This is exactly why the Treasury market is moving. Oh my gosh, yeah, look at that again. Now we're up again. We're up 7.7 basis points now at 4.36. Unfortunately, and oil's not much of a mover today. It's mostly yields, which is what we were focusing on, and today is a triple witching day. Not that that matters for a long-term investor, but shorter term, it's going to create more volatility. But let me get in here. I want to see if there's more insight on this troop deployment. But this also creates more burden for people who are borrowing. Private credit, buy now, pay later, whatever. It all gets more burdened and a little more poopy doopy. So it's not great. And it's why today I've really been watching the treasuries. All right. So interesting. There's an article here that's called "The Strait is Also a Credit Story. China Oil Industry CDSs are pushing higher on supply route vulnerabilities." Let me see if I can get any more insight on that. And then I'll share that. Oh, Chuck Norris died? No way, dude. Oh, that was not on the bingo board today. We needed Chuck Norris in the Strait of Hormuz. Come on, man. Come on. That's a bummer. All right. So let me see this here. Okay. Credit default swaps. Let me see if I can get a screenshot here. That's interesting. Yeah, it's not that exciting. Credit default swaps are slowly moving up, but there's nothing like really scary on these, Chinese CDSs, petrol or whatever. There is a little movement up, but there's nothing crazy here. All right, what else do we have here? Let me go into commentary here. So, stir market pricing shows significant P&L loss. One can conjure up many different definitions of the word crisis, but a practical one for a portfolio. Yeah, see, look at that. I told you it's not durable. If yields keep going up, the little bounces are not playable. They're not durable. It's like 100% what we warned this morning in the Alpha report. I even said oil doesn't even matter as much today. It's the Treasury market matters today. Nobody wanted to hear it. Well, I mean, of course members want to hear it, but usually when I talk about treasuries, people are like, "Oh, that's boring, Kevin." I'm like, it's your canary. I talk so much about canaries. I almost feel like I should put a canary in this room. Then we can hold up the canary. Anyway, all right. One can conjure many different definitions of the word crisis, but a practical one from portfolio management perspective is when the price becomes the ultimate fundamental. In other words, when you have to liquidate portfolio risk in mass because of adverse price action, you're effectively experiencing a crisis regardless of what's going on. So what's their point here? CFT data suggests speculators are short SOFR futures, blah, 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 blah. Some bets on forced liquidation. All right, fine. What else? Commodity prices are signaling further downside risk for risk assets. Markets are underpricing the supply shock stemming from the interruption of oil flows through the Strait of Hormuz. To gauge expected market moves from the conflict in Iran, we looked at the relationship between prices and commodities. across 4 different shocks. U.S. break-evens and precious metals appear too low relative to their moves. Equities in most regions outside the U.S. and Latin America look insufficiently priced for downside, with the greatest vulnerability in emerging markets from the sell-off in commodities, basically. Yeah, I mean, we've been watching copper as well, and copper's really fallen off. I mean, you're year-to-date negative now, and the anticipation is that this might continue. As far as, let me see, I'm still trying to get, oh yeah, here it is. Pentagon sending additional Marines. Okay, this is now just coming through. Pentagon is sending 3 warships with thousands of additional Marines to the Middle East. Roughly, yeah, but that's old. This is old news, isn't it? Roughly 2,200 to 2,500 Marines from California USS Boxer Amphibious Ready Group are heading to Central Command. Second massive deployment of Marines in the past week. Right, because the Japan-based group was sent last week, and they're expected to arrive at the end of this upcoming week. This is just a day after Donald Trump says no plans to put troops on the ground, but then again, he also wouldn't, rule it out or want to tell anybody about it. So let's write that down. So let's see here. Okay. Let's pull this up here. Come on, Mr. Mouse. Mr. Mouse doesn't want to cooperate today. It's okay, I have a backup mouse. Oh, that's why it's not cooperating. Stand by. Stand down. Stand by. And Mr. Mouse is working. All right. Let's write this down. So, geopolitics. All right. Iran. Last week, we sent 2,200 Marines and about 2,500 sailors to the Middle East from Japan. These included USS Tripoli and 31st MEU, and that is the Marine Expeditionary Unit. Okay. This week, this week, USS Boxer, Amphibious Ready Group, and 11th Marine, or MEU. 2,200 to 2,500 Marines via. There we go. This signals the desire to take Karg Island as a negotiation ploy to open the strait is becoming more likely. It also suggests, casualties could rise here. U.S. casualties could rise, and does not imply this war is close to over. That, as we mentioned yesterday, these folks are expected to show up by Friday, Saturday, Sunday. Expected to show up Friday, Saturday, Sunday of next week. So that'd be around 27, 28, 29 of March. It's unclear how long it'll take these folks, but if they're going from California, it's probably going to be, I would guess this is probably going to take about 15 days, maybe even a little longer. Probably closer to April 3 before this group shows up. I'd expect Trump would wait until both assets are in the region to make any moves, right? Just basically have more people there. This does delay some of that delays, straight reopening, somewhat resets the clock on troop arrival, if you will. Okay, not ideal. Oh man, yeah, 4.37 now, up 8.7 basis points. It's a skyrocketing over here. See, oil's done nothing. Nothing. It's all in the treasures today. And let's take a peek here. Qs can't really get anywhere. I've got MP material coming down just under its 55 line. I still think this one's slowly heading to 30, although it's taken quite a while. Calling the top was easier because it happened faster. But anyway, Intuit's actually green today. Yeah, some software plays, even DocuSign's green today. Adobe's green today. NVIDIA has come down a little bit, but it's been in this sideways range for a while. How's Oracle doing? Just to pay attention to Oracle, it seems like it's trying to build some kind of bottom here. Let's see. See that? It seems like it's trying, but we'll see if that can even hold on. And then how are we doing on the SPY? If we just go SPX, we're losing the 100-day moving average. No, that's the week. Yeah, we are. Sorry, we lost the 100-day moving average. The 200-day moving average is the one I'm referring to. We have not lost the 100-day moving average on the SPY since Liberation. Well, actually, right before Liberation. Here's where we got liberated. That's interesting. I spent quite a bit of time here sideways at all-time highs. Bitcoin falls under 70, back to about 69.4, which is better than where it had been. It's off the floor. And then we've got, let's look at Owl, Blue Owl. Owl, wow. Still under 10. Sitting right at about $9 over here on Blue Owl. And I think Restoration Hardware is at, not quite. Not quite at Liberation Day lows. Liberation Day lows were 123. All right. Let's see what else we got here. Wall Street Journal. So we saw this yesterday. These are the A-10s and the Apaches trying to reopen Hormuz. South Pars gas fields is Iran's biggest economic safety net. We'll take a look at that. Avoid overheated assets, says the Wall Street Journal. Battlefield map of critical energy. Saudi Arabia, 180 if this keeps going. Tesla finally has its first semi-truck, and it's already a hit. Oh, that's awesome. Let's take a look at that. Some mass deportation policies went too far, Trump told his inner circle. Oh, interesting. Trump sues Harvard over civil rights. OpenAI plans to launch a desktop super app. Oh, to try to compete with OpenCloud. Supermicro got whacked on the smuggling story. All right, I want to see the Cybertruck thing. Let's see what we got over here. Anything else here? No. Okay. Let's take a look at this. Tesla. All right. All right, surrounded by screens, backed out of there, no problem. Pilot model of the Semi. This summer, after years of delays, Tesla began shipping mass-produced semis from its Nevada Gigafactory. The company is expecting to deliver between 5,000 and 15 before ramping to 50,000 a year. Wow. Surprisingly, Tesla is winning over a hard-to-please influential group of truckers. Truckers who drove it in pilot tests say they love the features, including a centered driving position, faster charging, and longer range for about $100,000 less than other battery electric trucks. That's great. Tesla's focused on cyber cabs and Optimus, blah, blah, blah. Swapped out a 13-gear diesel truck, which is automatic, for a 1-month pilot test. It's easier on your body. It's less stressful because you're not having to engage the clutch and the stick shift, but I thought it was automatic, but whatever. You've got Tesla says the semi can charge 4 times faster than other battery electric trucks, reaching 60% in 30 minutes. Wow. That's actually pretty impressive. Slower than filling up with diesel, but not bad for an EV. I think the thing looks really cool. So, are these just people comparing other battery trucks? California, ground zero for zero emission, freight downturn, trucking companies are securing grants for trucks. Tesla produces 2 semi-models, 325 miles and 500. Haven't talked about price yet. People familiar with the orders say they come in at under $300,000 or double the cost of a diesel truck. Wow. Fewer moving parts, don't need regular servicing. The servicing aspect is a big win with EVs. You know, substantially less. That's cool. Let's see what people are saying here. Now let's see the Roadster. Okay. Yeah, cool. All right, great. So that's great for Tesla. Let's go take a peek over here. That's the deportation policy one. Let's look at this. Latest attacks on oil and gas infrastructure marked a dangerous new phase, worsening the energy crisis. Israel on Wednesday struck Iran's South Pars, which we remember talking about that. So South Pars is over here. Here's the Strait of Hormuz. Okay. And then, of course, we had the retaliation. We had attacks continuing Thursday. Brent crude prices move up. Oil markets open after initial attacks. Fuel tanks, Carg Island. Well, now there are the threats of the takeover of Carg Island. That's going to be interesting to see how markets react to that if that ends up occurring. Let's take a look at CME Sizzle just to see the rate change here. And we still sit at, on bonds, 4.37. That's just a massive increase in the 10-year. I mean, we were under 4 there for a minute. Look at that. We were at 3.96 about a month ago. It's incredible. And, now we've gone up about 46 basis, but almost 0.5% of an increase on the 10-year. So, that just drives mortgage rates straight up too. Not great. Okay, what do we have here? Saudi Arabia's oil officials are working to frantically project how high oil prices might go if the Iran war and its disruption doesn't end soon. And they don't like what they're seeing. Yeah. Okay. Base case, several oil officials in the Gulf said that prices could soar past 180 if disruptions last until late April. That would sound like a bonanza for the kingdom, still heavily leveraged to oil revenue, but it's deeply concerning because it could push consumers into slashing oil use or trigger a recession that hurts demand. Right. They would also risk casting Saudi Arabia as the role of profiteer in a war it didn't start. Saudi Arabia generally doesn't like too rapid increases of oil because it creates longer-term market instability. Right, you have a lot more volatility. 180, that'd be wild. You know, the rise that we've seen in oil prices has already been substantially worse than what we saw when Russia invaded Ukraine. So it's been pretty aggressive, this oil movement. Let's take a peek here at the Qs. Yeah, see, Qs can't get anywhere until those yields come down. It's the meta today. 2% on Tesla, despite that semi-truck news, huh? The semi-truck news is interesting. It's all going to come down to ultimately, you know, how much does that actually drive any kind of profitability? Anyway, okay. Let's see here. 200 per barrel is not outside. Contracts release reached an all-time high in July of 2008 at 146. Somebody here in the chat writes, Turbinio writes, Russia produces about 10% of global oil. Straight produces about 20%. Well, there you go. Let's see here. Oman is benchmark. Tankers of physical crude priced at a fixed spread to the benchmark. Saudi customers are balking at using the benchmark. War has already removed millions of barrels from global supply. Price is up about 50% already since the conflict began. Saudi Arabian light crude is being sold to Asian buyers via the Red Sea port for around $125 a barrel. That's interesting. So it's sort of like different pricing. As extra oil in storage, some of which was shipped out of the Gulf ahead of the war, uses up physical storage. Physical storages will bite more deeply next week, causing prices to close into 138 to 140, the official said. Interesting. So as physical storage is used up, prices are likely to go even higher on oil as soon as next week. Someone in the chat says Reddit's on the move today. Let's go take a peek. Yeah, look at that. Some enthusiasm there on Reddit. Looks like Reddit has a pretty big support line at 133. We didn't quite bounce off that today. But you're right, there's some real volume coming in. This is on the 5-minute volume chart. Man, just straight off a cliff here, which means yields up. And Qs are getting their first 5-minute green over here that we've seen in the last about 30 minutes, 40 minutes. Okay. Average pump prices have rocketed. We are at the highest level since right after the Russia-Ukraine invasion. By the second week of April, Saudi officials expect prices to hit $150 before stepping up to $180 in the weeks after that. Wow. And remember, it's going to take, 10 to 15 days to get those troops to the region that Trump is sending. And people aren't heavily enthused by that. Wagers that Brent futures will hit 130, 140, 150 next month were popular positions as of Wednesday. Great. So now we're getting, those call options. That call option betting is starting to move up in price. Market is not acting like this is an end of March thing anymore. I don't think 150 is out of the question. More variables could get prices to move. Okay, Russia is contributing to supply. Demand could fall, which would bring prices down, but that potentially only in tandem with a recession. Right, because then people were pulling back, driving, going to the mall, flying, whatever. 150 is where people really start to put their pencils down and do the math. Americans might start working from home, rethinking vacations, driving less. Price at the pump. Gasoline demand tends to start declining once gas prices exceed $3.50 a gallon. Oh, that's interesting. For many, that price is already here. Average retail price of gasoline is $3.88 on Thursday. It's a lot higher in California. Diesel is already hitting companies that rely on the fuel. Let's see here. Saudi Aramco is also weighing a scenario where the rapid rise in oil costs puts downward pressure on other countries' currencies, raising their effective cost of energy even more, driving inflation and rates up and slowing their economies. This run-up could eventually hit the U.S. Well, that's why you're now seeing the Fed market pricing in a potential rate hike by October. Now, this is no bueno. Okay, there it is. Now the Wall Street Journal is covering it. Let's see if they have any more insight here. Okay, Boxer Amphibious Group. Yo. Trump called NATO a paper tiger and cowards. Oh. Over 100 arrested in UAE for videos and misinformation. Apparently. Wow. Cracking down. Pentagon sending thousands of more warships, or thousands of more soldiers. Second massive deployment in the past week. Yeah. Iranian man arrested for trying to enter UK nuclear base? What? British police arrested an Iranian man who attempted to enter a nuclear base in Scotland. What? The 34-year-old was detained along with a 31-year-old woman. Fastlane houses UK's nuclear-armed submarines. Unsuccessful attempt to enter the base. Wow. Wonder if the guy had any weapons with him. All right. Deportation. Some policies went a little too far. Yeah. I think that's fair for him to admit. Talk Tesla. We saw the more troops. Saudi Arabia. South Pars. Oh, ABC pulls The Bachelorette after video showing the star's alleged violent behavior towards ex. Yeah, doesn't she have a domestic violence case? Or I think the prior ex has a domestic violence case against her. Taylor, Frankie Paul being violent towards her former partner. In light of the newly released video that would surface, we've made the decision not to move forward with the new season. Wow. That sucks for her. Imagine being, imagine like, yay, I'm going to be the Bachelorette or whatever. And then you get rugged. Well, don't beat people, I guess, huh? Interesting. Okay. Let's keep going here. Is the video benign or is it bad? Somebody just, I don't really care to go look for it right now. But look at this. Now we're at 4.38. It's even worse. She was throwing chairs. The video is wild. Are you serious? All right. I gotta look. Ah, supposed to be doing work. Bachelorette. TMZ. Trigger warning. Near a child. Oh, great. I really hate this kind of stuff. Yep. And then, of course, TMZ's banners or something else. But hold on, let's actually get this to where the audio will function. There we go.
Yeah, look at you. Look. Yeah, look. This is called physical abuse.
Oh, she's pulling his hair. He's documenting it.
Yeah. See, Taylor, this is all you do. It's the only thing you know how to do. Holy sh**.
It's okay. I don't give a f***.
Let me go. Stop.
Oh my gosh.
Dude, leave me alone.
Oh my gosh. Wow. I like the classic TMZ. Oh, by the way, did you see the child? With the ding. Oh my gosh.
Right here. Oh my gosh.
I think those chairs are from Target. That's pretty crazy. That's pretty wild. All right. Let's see here. Okay. Amazon acquires a robotics startup. What, for deliveries? River is let's see, based in Zurich. Valued at 110 mil previously. Huh. All right. After a courier completes a drop-off, River's delivery robots can shuttle other packages from the car to separate locations nearby. Wow. Robots are going to be delivering our packages. All right. Uber, self-driving Quest, SEC idea that could jolt the IPO market. Like, get more people to IPO? I don't know. I mean, the market needs to actually perform better for more companies to IPO because people don't want to, Figma or Gemini. I was looking at Gemini this morning. The thing's down like 88%. Sorry, Gemini Space Station. The crypto company, right? And look at this. This is horrible. They were up like 6% in after hours yesterday because they said they were laying off like 15% of their staff. But that got eradicated real fast. But this is the, only requiring twice a week, twice a year financials. I don't think it has as much to do with the financials as it does, is this the kind of market that you want to risk your stock like plummeting in? All right, what else? Kalshi raises $1 billion at a $22 billion valuation. That's wild. Yeah, you always see, like, they're running all these ads now. Bet on anything, bet on anything. That's the point. They want you to bet on anything because the spreads are horrible, and that's how the brokers make way more money. There's way more money to be made in betting than there is on, like, selling, having people invest in stocks, like with Robinhood, just on the stock side. That's why Robinhood encourages options. That's why Robinhood encourages crypto and margin, because that's where they actually make most of their money. Now, betting markets, there's even a higher spread in betting markets. And it's super juicy for brokers. Iran war threat is the greatest. Iran war is the greatest threat to global energy in history, warns the IEA. Wow. Desperation, thy name is Scott Besson. The perils of the Hormuz escort plan. Yeah, let's take a look at that. Oh, JP Morgan is now also going to monitor keystrokes of their junior bankers, which, like, how awkward is that? They said if I command F this, I should find keystrokes. Yeah, there. Look at this. They're going to estimate employees' weekly digital footprint, including how many video calls they do, how many desktop keystrokes they make, and how many scheduled meetings they have. You talk about a miserable job. Now how many times you push a button on a keyboard is going to get monitored? Oh, man. Talk about Big Brother crap. Gross. No faith anymore in humanity here, apparently, JP Morgan. But it doesn't surprise me. I hate JP Morgan. USS Samuel Roberts was returning from the Strait of Hormuz escort run when an Iranian contact mine exploded, ripping a 9-foot hole into its hull. Wow. When was this? Almost 4 decades on, the Gulf incident in 1988 is a stark reminder of the perils of Trump's plan to restart traffic. World economy is reeling, political pressure building. U.S. military chiefs must calculate what level of threat is available. U.S. military planners consider the risk too high. U.S. warships built with a single hull are particularly vulnerable from mines and fast boats, which the Iranians have armed with small missiles and rockets. Right? It's the RIBS, rigid inflatable boat, or what's the other one? The one that's just rigid all around. Yeah, whatever. Any convoy could also be targeted by unmanned surface vessels, ballistic and cruise missiles, and drones. The drone threat's a problem. Big problem. You could just pop out of a cave and launch them pretty fast. And then you'd be pretty close to your target, too. So interception time frames would plummet. Man, the 10-year does keep going. That's crazy. Supreme leader to issue message for start of Iranian New Year within minutes. Okay. Let's see here. U.S. would likely start an escort operation with a small convoy. This could be 2 destroyers, each with about 310 sailors. A commercial tanker would probably lead the line of ships because they have double hulls and could absorb a hit from a mine without sinking. Oh, really? The destroyers protect against missiles and drones. They also have anti-submarine and some limited anti-mine technology. Ships would be spaced out 1.5 to 2 miles. Exact formation would likely change between runs. To prevent radar missile blind spots, you'd mix them up. The aim would be that no commercial vessel stands between Iran and a U.S. warship. Right, so that way you can intercept. But you'd travel through the strait single file. Wow. Anywhere between 8 to 12 destroyers would probably be needed for the whole operation. 10 is a good number. Kevin, you must look at long-range strategic business plan that Elon Musk posted. Yeah, I see you have another plan. Let's go see. Then we'll come back to this. He posts so much. It's so hard to find his stuff. Yeah, I'll just try to Google it. Elon Musk long-range strategic plan. That's just so nice. Now, did I miss it? Did I scroll past it? Elon master plan equals keep changing the plan? Yeah, I mean, that's exactly right. Somebody says, did a fighter jet get taken down? Well, a couple days ago, a fighter jet did get hit by Iranian fire. We're not sure if that was, a missile or what, but yes. Tesla terrified. Is it the chip manufacturing project? It's a picture. What's it a picture of? I don't know. Oh, there it is. I mean, that's a decent meme. Okay. It's all on the peg of the Strait of Hormuz. Okay, all right. It's a good meme. Oh, and then somebody. Oh. All right, I had to bring it right back to the Epstein files. Escort would require aircraft so they could tackle a swarm of drones. Any escort operation is not expected to start until the U.S. Tripoli reaches the region from Japan. Not expected to arrive until the end of next week. Interesting. All right, so let's write down some of this. So basically, escort plans. Wall Street Journal reports escort, how should we put it? Hormuz escorts may begin once amphibious units enter region. But it will be hard, obviously. Fast boats, which are hundreds if not thousands, are a particular concern. Hidden along the coastline, they could be loaded with explosives. Iranian fast boats and drones loaded with explosives and drones are the risk. U.S. is using A-10 Warthog aircraft in a hunt for Iranian vessels. Would not be easy to determine whether enough fast boats have been destroyed to keep the convoy safe. Because they are small and numerous, they can be distributed widely and are probably in tunnels, large garages, hangars, and parking lots. Yeah, because you just throw them in the water pretty quickly. They're all over the place. Creeks, inlets, you've got to find where they're hiding. Minesweeper would also need to pass. The U.S. has been striking mine-laying ships. Yeah, but some are already probably laid, the mines. We're going to have to literally test the waters a little bit. Testing the waters. No longer need or desire NATO's assistance, says Trump. Right. We don't need your help. Then we need your help. Now we don't need your help. What a mess. What a mess. Let's see what people are saying in the comments on this one. Let's see. Iran knows this long-term strategy will do the most harm to opponents. Sure. Blah, blah, blah. Okay. Let's keep an eye on here. Yeah, see? Qs can't get anywhere. Not with the 10-year treasury doing this. I'm just looking at the longer-term proxy here, TLT, just as a little easy tool to watch it. Okay. Not great. Let's keep going. So FT. Okay. Also have, where was that? There was a piece yesterday that was, oh yeah, the JP Morgan piece. I'll take a peek at that and TS. Okay. So let's take a peek at this. One sec. Okay. What do we have here? Iran oil war shock, shift towards a reprise of 22, clear facts. Trump does not want energy prices to remain high in an election year. Yeah, that's true. Iranian goal is regime survival, seen as victory in this war. Right. 2 conditions. Okay. Let's see what they say. Overall, the change overall, in our view, boils down to a bearish shift in probabilities. Okay. Karg wildcard, war taco, limited Iran agreement that all Gulf shipping will be unmolested. Theory. Iran has no incentive until its exports are squeezed. And then military solution, the non-taco, boots on the ground, Hormuz operation takes months, and you prepare for some kind of invasion. It takes 2 to taco. Well, yeah, now it takes BB to taco as well. Karg could be part of the go for broke approach. It would involve complete destruction of the island's oil infrastructure to starve the Iranian regime. Carpet bombs of Karg might be accompanied by an invasion. Nothing to lose retaliation from Iran after that, though. Also true. Commando raid on Karg. Let's see here. More probable version per T.S. Lombard. Commando raid of Karg. Taking control of it, basically. Okay. And then I also saw Trump says Iran is not going to have nuclear weapons. Oh, is he yapping somewhere? Probably. Let's see if I can find it. But in the meantime, nope, nobody's covering it right now as far as I can see. But that's all right, because I want to keep looking at this stuff anyway. So the JP Morgan piece that I was sent. Let's pop that open. Apparently, can't get that darn thing open. All right, there we go. That'll work. All right, here's the JP Morgan piece, which is... Trump commented that Israel will not, they misspelled Israel, will not conduct further attacks on Iran's main natural gas facility. That's fine. Narrative. We talked about the Qatar damage. Market is pricing in a quick end to the Middle East conflict and reopening the strait. High risk assumption, giving S&P and oil correlations typically turn increasingly more negative after a 30% spike. Yeah. Much of the market's attention has been focused on the inflationary impact from higher oil prices, but in our view, the bigger and more consequential question is the potential negative transmission if the strait does not reopen. After energy rationing and substitution effects are exhausted, one could expect a negative impact to GDP. If oil demand destruction occurs, we expect equities as well as prediction markets to start pricing in slower growth and the higher odds of a recession. The washout investor sentiment could ultimately prove to be a clearing event. If the S&P 500 sell-off gains momentum below the 200-day moving average, strong support may not materialize until 6,000 or 6,200. Okay. Let's see where we sit right now on the SPX. Well, here's the day chart. And so far, we're getting momentum under that 200-day moving average. Obviously, today's been, an additional rough day as, we've got this, what's it called? Let's see here. This treasury rally, yield rally, rather. It's not really a bond market rally. It's a yield rally, which means the bond market's actually selling off. Oh, wow. Yeah, look at that. Now you're up 10.3 basis points right here. That's just nuts. Okay. So, okay. Okay, this is a little bit on the Fed, but there's nothing new there. Too soon to know the scope. Middle East conflict. Let's see. Extensive okay, excerpts. Blah, blah, blah. All right. And the most interesting comment out of this is basically just the S&P 500 losing or accelerating a sell-off under the 200-day moving average could bring the S&P 500 down another 10%. And they're lowering their year-end price target because of the war. What a mess. All right, let's see what the Times have for us. Okay. We firmly believe in strengthening the relationship with our neighbor countries, says the Iranian leader. Yeah, how's that going? By attacking everyone. More attacks reported in the Middle East. Of course, they're still attacking each other. U.S. military ramps up to clear the strait. Yeah, we'll see how that goes. Iran executes 3 men, including star teenage wrestler. Wonder why they got executed. We talked about the Fed. Okay, let's go see. So here... Oh, what? Protests? 3 men were executed by hanging in Iran on Thursday as they were convicted of killing 2 police officers during government protests. Yikes. One of the men was a decorated 19-year-old wrestler. The groups raised concerns about his execution, pointing to the fast-track trial and a forced confession. Wow. They were convicted of waging war against God, a charge that is punishable by death, and what the Iranians usually use to punish dissidents. Iranian authorities regularly extract forced confessions from defendants through pressure tactics, including solitary confinement, threats against family members, and torture. Wow. Yikes. Iran executed more than 2,000 people in 2025, the most since 1989. That's a stat. So, Iran executions, 2,000. More than 2,000 Iranians executed, most since 1989. And then, of course, I mean, you had even more people die during the protests. Wow. Okay. Then U.S. military ramps up to clear Hormuz. We saw that. This is just the A-10 and Apache talk. Okay, so that's nothing new. Biggest thing today is that 10-year just keeps going. Almost at 4.38 now. Private credit risk show cycle has not been repealed. What is this? Concerns about private credit in recent weeks should serve as a reminder to investors that the credit cycle has not been repealed. What does that mean? The unusually long period of cheap borrowing following the 2008 financial crisis, but worries about the credit cycle could be about to turn due to the private credit exposure to tech companies. In his annual letter, Solomon said the investment bank was optimistic about the operating environment, but cautioned that it was not hard to come up with scenarios where risks are a lot more pronounced. Okay. In recent weeks, for example, concerns about private credit, including underwriting quality or exposure to software companies that may be adversely affected by AI, are a reminder that the credit cycle has not been repealed. So in other words, like, a down cycle is still possible. And then, of course, Iran has the potential... let's see here. Oh, despite concerns, there's still the potential for a more constructive environment. Okay, whatever. This is boring. Okie dokie. Crazy yields right there. So, what do we get over here? Could the U.S. release more of a strategic oil? Let's see. Besson also pointed to $400 billion release of the strategic oil reserve approved last week. Largest coordinated release in history. The U.S. oil reserve is a series of vast subterranean salt caverns in 4 different sites in Louisiana and Texas. Oh, that's very interesting. The average cavern holds 10 million barrels. Wow. That's crazy. Huh. All right. What else? U.S. could declare an emergency, blah, blah, blah. Drawdown of the strategic oil reserve, blah, blah, blah. Okay. Well, it seems like we should have probably filled that up before going to war. Sometimes I wonder if they just kind of forget about it for a moment. Okay, IEA is now warning that it could take 6 months or longer to fully restore oil supplies. Well, that's not great. So that's the IEA. Warns it could take 6 months or more to fully restore oil and gas flows. That is not good. Let me see, okay. Take a listen over here for a moment.
Yeah, this is definitely a refined product story, because you could have all the oil in the world, but if you can't turn it into the end product you need, it is useless. And we talked about how some of those oil fields may not come fully back online. If you shut down a refiner, it takes, we're talking about months to get that back online.
Right, that's exactly what the IEA is talking about in this article here.
That's what a refinery complex is. And the fact is that as they start reducing runs, those markets are going to get even tighter. And we look at things like, production being diverted to Yanbu and Fujairah. That's not the oil we need. That is Arab light oil. What we really need is medium and sour grade oil. This is really a kind of a crisis for the middle of the barrel. That's why we're seeing diesel prices, jet fuel, both hitting records over in Europe. In the U.S., we produce jet fuel A, which can't be used in Europe because of carbon restrictions. And so this is really a refined product story. And these supply chains are so global and so intricate. And so each passing day is making those product markets even tighter.
Wow, that was a lesson. So we need medium and light.
We need medium and sour. We have a
medium
lot of
and sour.
Yeah. So
okay,
the Arab light is being what's
Bang. Okay, Axios. Let's see if there's anything new in this piece. So Axios here says Trump mulls Karg Island takeover. We heard this yesterday, but I want to see if there was any additional information here. Processes 90% of Iran's crude. Could put troops in the line of fire. Within a month, we need about a month to weaken the Iranians more with strikes to take the island and then get them by the balls and use it for negotiations. A source with knowledge of White House thinking. Ugh. You need an additional month. That's exactly what Saudi Arabia was concerned about. If we look at this, Saudi Arabia sees a spike to $180 a barrel of oil. President is going to do what's right. No decision has been made. We want Hormuz open. Tom Cotton says Trump has been prudent to not rule out a ground invasion. Oh. Okay. Such a mission could expose U.S. troops to a degree of risk. Behind the scenes, sources said an occupation of the island by ground troops is under serious consideration. Another option is to impose a naval blockade. I guess you could do both. Jeez. All right. How are we doing over here? So, nope. Qs keep selling down. So lower, lower, lower. Painful. Yeah, down what? Tesla's down 1.8. Meta's down 2.2. Just the bleed continues. All right, let's do a little bit of a recap of some of the info that we've got so far, especially with this troop deployment. Hold on, let me see if they've got anything here for Rob.
Things like know your customer, sales processes, and the
For
like.
AI.
They didn't mention anything in terms of like the kind of bread and butter investment banking and how that's going to really reshape what you envision as an employee of Goldman Sachs at this point in time. Right now, it's more of back end.
Okay, that's boring. Let's try over here.
Or ongoing, depending on your point of view, chip and AI war between the United States and China. This is a multi-front.
This is in part probably about Supermicro, which has been selling off because of the risk that, you know, somebody who owns like 25% of the shares of Supermicro was involved in selling NVIDIA chips to China against the law.
Whether or not it was a single actor. The point is, this is one of, you know, several cases where we've had to have a good hard look at you know, chips between the U.S. and China.
Amy, this past weekend, you gave a keynote at South by Southwest, and you announced that after 18 years, you're killing your tech trends report, and you've basically, and correct me in my summary, said that there's no point in looking at backward looking data and trends. You now have a convergent outlook. In the time we have left, about 60 seconds, explain it to us.
Sure, we did throw a funeral this weekend for the thing that we were most famous for. Look, executives are very caught up in what is trendy versus what are the longitudinal changes impacting their organizations, the market, their ability to compete. Rather than tracking individual trends, it's incredibly important that they start looking at the intersection between trends and uncertainties and catalysts. Those are called convergences. Every boardroom, every leader needs to start tracking those seriously because the fate of their ability to survive and weather the storms that are ahead are dependent on having that information at their fingertips.
Amy Webb, CEO of Future Today.
Yeah, that was also kind of boring. All right, let's go through this. Okay. All right. Well, Donald Trump is now sending more troops to the Middle East, literally a day after yesterday, Donald Trump said, we're not going to put troops on the ground, though maybe we won't tell you because, you know, it could be part of the element of surprise. Keep in mind, numbers-wise, last week, we initiated the sending of 2,200 Marines and 2,500 sailors to the Middle East from Japan. It's the USS Tripoli and the 31st Marine Expeditionary Unit. They're expected to show up at the end of next week, so around Friday, Saturday, Sunday. That's the 27th, 28th, 29th. However, today, we just announced that we were sending an additional 2,200 to 2,500 troops, Marines, via the USS Boxer Amphibious Ready Group and the 11th MEU to Central Command. This is coming at the same time as we're hearing rumors that the Trump administration might want to take over Kharg Island. We'll talk about that in just a moment. But before we could do that, there are expectations that it could take upwards of a month to be ready to actually take over the island, which creates other problems, including Fed rate hikes. See, Saudi Arabia argues that if this oil shock goes into the middle of April, we'll probably see oil at $150 per barrel, which Goldman Sachs says is recessionary. If we end up getting towards the end of April, they see oil getting to $180 per barrel. And unfortunately, these inflationary impetuses, whatever, they are leading this the broader bond market to now start pricing in rate hikes. Now, on Tuesday, I made a video saying prepare for the potential of rate hikes, that Jerome Powell and the ECB would start talking about rate hikes. Unfortunately, both of them did in the days afterwards. The ECB yesterday talking about their base case seeing inflation up 0.7% above their previous 1.9 estimate, moving it up to about 2.5%, which isn't great, somewhat leading to a potential for rate hikes. In fact, the European Central Bank said that they're going to start discussing rate hikes in their April meeting, but they probably wouldn't hike until in April. They'd probably wait until June, but that is now on the radar. So the ECB is putting on the radar rate hikes. And now we have our futures markets indicating an over 30 Well, let's actually see here. And it's gotten even worse here since I last updated this. October 28th, 2026 is now showing about a 47% chance of rate hikes. Actually, if I could just add this together here, it'd be about 48.4% chance of rate hikes. All this on the right over here would be one rate hike, and this right here would be a 10% chance of two rate hikes, so 50 basis points of hikes, by October. So again, this is what we warned about on Tuesday. And then a bunch of people got mad at me in the comments. They're like, there's no way, Kevin, there's no way. And I'm like, come on, folks. I study this a lot. And unfortunately, now the futures market is starting to price that in. One place that you're seeing this manifest is actually a place that in the Alpha report this morning, we said, listen, the only way we go bullish on the Qs today, and this was blunt in the Alpha report, is if Treasury yields come down, because they were rising this morning. And I'm like, this isn't good. Unfortunately, exactly the opposite happened in the Treasury market. Rather than yields coming down, we saw yields rise as the market is starting to price in rate hikes. That led the NASDAQ 100 to sell down off our opening at about 592 down to about 586. The S&P 500, not looking at the Qs there, but just looking at the S&P 500, is now trading below its 200-day moving average. And JP Morgan warns that if we have any kind of sell-off below that 200-day moving average, which is what we're seeing right now, so in other words, we need to rebound to prevent this, JP Morgan says the S&P 500 is likely to not find support until the lower 6,000 range. You can see that document right here that I was sent. If the S&P 500 sell-off gains momentum below the 200-day moving average at $6,600, strong support may not materialize until essentially an additional 10% correction down to the low 6,000 range. They're lowering their S&P 500 outlook for the rest of the year. They believe that higher oil prices can lead to demand destruction and ultimately increase the odds of recession, which is that R word that we don't want to hear about. Now, obviously, the concern is the longer this goes on, the greater the risk to the economy. Saudi Arabia, just to dive into this for a moment here, keeping also in mind that the oil shock that we've seen so far is already worse than what we saw in 2022 when Russia invaded Ukraine. Obviously, the Gulf is more important for oil, but what we're seeing here is the previous all-time high for oil was $146 per barrel in July of 2008, which happened right before the recession as Lehman Brothers collapsed in September, thanks to the excesses related to the real estate market. Now some people are saying history may not repeat, but it might rhyme that you could have excesses in private credit coincide with potentially new all-time highs for oil, highs that we've never seen before. There's an energy consulting firm here that says $200 a barrel is not out of the realm of possibility. Gulf futures tied to Oman crude, which are less liquid, are currently shooting past $166 per barrel in futures pricing. And we're starting to see options indicate more bullish bets on oil getting to about 130 to 140, which we weren't seeing about 2 weeks ago. Saudi officials say they expect that oil prices could hit $150 if we get into the second week of April and the Strait of Hormuz is still closed. The problem is, in order to actually get the Strait of Hormuz to reopen, we're going to need more Marines. And that's exactly why the Pentagon is sending more Marines. Issue is, we're not expecting the first batch to show up until the end of next week, and the next batch, which is coming from California, could take even longer to show up, probably closer to that April 3rd, 4th, 5th weekend, which is after we get the next set of jobs data. Now, Trump is also thinking about taking over Karg Island to force Iran as a leverage point to open up the strait because 90% of Iran's crude oil goes through here. However, military intelligence suggests, quote, "We need about 1 month to weaken the Iranians more with strikes to take the island and then get them by the balls and use it for negotiations," a source with knowledge of the White House thinking said. Now, the Wall Street Journal had a whole piece about how we could potentially escort tankers through the Strait of Hormuz. But the big risks that we face are that in this sort of fishbowl that you're in going through the strait where you've got these cliffs around you, the risk is that small ribs or smaller boats laden with explosives can just run out essentially, or overwhelm, by using multiple of them, overwhelm destroyers or escort ships that we use in the region, which is exactly why the Marine Expeditionary Unit is likely being sent to the region, so you could line troops along the shore while ships pass through. Problem obviously with this is it really puts your troops under the risk of Iranian fire, since Iran knows the more and longer they can keep this war going on, the more likely Iran spikes oil prices, and as a result, the greater chance of a global recession, which unfortunately is exactly what Iran wants. They would love nothing more than to damage the global economy, and then they could essentially take credit and say, hey, this is why you should never attack Iran. Now, Iran has sometimes also a self-destructing sort of MO. The Iranian regime has executed more than 2,000 Iranians in 2025. That's the most that they've executed since 1989, and that's in addition to like the 6,000 people that were killed in protests in December and January. Wall Street Journal is reporting that Hormuz escorts may begin once those amphibious units are in the region, but again, that's going to take 2 to 4 weeks to happen, which unfortunately aligns with this Saudi Arabia article in the journal that indicates we're probably looking at 150 to 180 a barrel not being out of the question. And Brent futures bets currently hitting the 130, 40, and 150 level for April, as it doesn't look like the war is coming anywhere close to an end. This is obviously inflationary, and it's exactly why we're starting to see markets price in rate hikes rather than cuts. Now, what you really ought to focus on today is not just the fact that Brent has now moved up another $2, up to about $110 per barrel from about the 108 where we started the day. But the real concern is the fact that the 10-year Treasury yield has moved from about 4.34%, which is like 10 basis points higher than what we had yesterday, up to now almost 4.4. We're sitting at 4.39. And the more pressure we see on the 10-year or the 2-year, and the more of this sort of bearish yield curve flattening that we're getting, more pressure on private credit, which is that very similar rhyming ticking time bomb that we saw in 2008, except then again it was real estate, now it's private credit. I actually think real estate is a unique hedge because my base case is that by 2032, whether it's because we have a recession in the near term or in the longer term, by 2032, I think rates will be lower than they've ever been before. I actually think we'll have lower mortgage rates than we had in 2020, which seems remarkable because during that panic, we cut rates to zero and people were, including myself, were getting loans at like 2.75%. I actually think by 2032, we'll see even lower rates. But that's just my opinion. That's just my speculation. It's one of the reasons why I think hedging by exposing yourself to real estate right now is such a strong bet, because that's not where the bubble sits now. Bubble sits elsewhere. But it's triggered potentially by, again, rising inflationary concerns, rate hikes. This increase in the 10-year accelerates the pain in private credit, especially since a lot of businesses or zombie businesses that probably deserve to go bankrupt, but they're drowning in debt, and rates are going up and not down. Now, just so you can understand what a bear flattening is when yields on both the 10-year and the 2-year are rising, which they are. The 2-year's up about 9.1%, the 10-year's up about, or basis points, the 10-year's up about 10.7. We're almost at a 4 handle on the 2-year. That has been leading the 10-2 spread over the last few weeks to flatten down. You could see this sort of, let's go to like the 3-month chart over here. You could see this fall over here from about 0.72 on that yield spread down. Usually that going down is less of a sign of a recession risk, but it's bearish for the economy when it's occurring because rates are going up rather than down. You'd rather have a bull flattening where rates are going down because inflation concerns are going down, and then you could actually encourage the writing of the private credit ship and encourage risk taking in the stock market or otherwise. Unfortunately, because that's the opposite of what's happening right now, we are seeing the Qs suffer, which is exactly what we expected in the Alpha report this morning. I hate to say it, but I gave a very blunt warning in the Alpha report this morning, and I said that you should watch TLT. If TLT goes down, don't make an upside bet on the Qs. In fact, when we saw the Qs move up right here and we were live in our course member live stream, I said this may not be stable because we're not actually seeing yields come down. When yields go down, this line goes up. And so we were able to use this as a canary to indicate oopsie doopsies. Not great. So we've got a confluence of problems here. Troops are going to take time to show up. They create risk for American lives. But what we're indicating is even though Trump is saying, oh, yeah, we're not going to tell you if we put troops on the ground, maybe we will, maybe we won't, but we're not going to tell you. And the timing elements that it's going to take 2 probably to 4 weeks to actually get the situation, to get troops in the region, we're in a bit of a poopy-doopy place where we could actually see Brent crude, as Saudi Arabia puts it, or UBS or others, that if this war continues into April, we're probably looking at substantially higher oil prices, and that they've been suppressed so far under the belief that this war will end, or this incursion will end, much like Operation Midnight Hammer last year, 12-day war, will end in a short period of time, less than 30 days. Well, we're coming up on our 30-day anniversary next week of this war already, and so far, there's no end in sight, which is bearish. If we get into April and this war is still going on, which at this point is likely, and oil prices and treasury yields continue to rise, and we continue to price in rate hikes, our bear bull scale is going to continue to decline, and the odds of recession, unfortunately, continue to rise. This is not ideal, but it is the latest of what's going on. Now, is it possible that the takeover of Karg Island will end up forcing Iran to negotiate? Maybe. That's the hope. When we take over the island, it squeezes 90% of their oil production, and hopefully that encourages Iran to negotiate. The problem is, not only is it hard to do this, whether you commando raid the island or you have a naval blockade or whatever, the problem is not just the American lives that could be lost in this, but the problem is also that it may not work. You could take over Karg Island, you could destroy Karg Island, and Iran may not want to negotiate and enable the reopening of the strait. Because Iran knows the longer this war goes on, the more the global economy is damaged. And if we end up triggering the nasty recession that Iran can claim credit for and say, look, you might have better bombs and a better military, but we destroyed your economy. Don't mess with Iran in the future. Then Iran takes home a pretty big win. It hurts the global economy, so it's sort of like, ripping off your nose to spite your face, because, Iran will have a nasty recession as well. But it sucks for everyone. Anyway, that's my take today. Appreciate you all watching, and we'll see y'all in the next time. Goodbye and good luck.